Alright then, what is going on? Trade recap of the day. Well, actually, trade recap of yesterday. We took a post FOMC trade. It was a lovely little win. And yeah, let me break it down for you. Let me quickly show you the P now. Bear in mind, this is evaluation. We are still early doors of futures. Forex is our forte. Futures is just a recent little thing I've started. But yeah, up $550 on the week on the eval. Balance at about 3% total. And yeah, 3% that I passed evaluation. Again, obviously I could just full bought the fucker. And as I probably will, I will risk heavier on later evaluations. But this one, I'm proving the concept. I'm fairly new to futures. I want to let this almost be like an opportunity to really build the skill set instead of just getting a funded account and then potentially blowing it. So I'm taking it not slow, like I'm still risking over 1% a trade. I'm risking like $650, which means I have 3 losses to blow until I blow the account. And yeah, this is the week's P&L. So I'll go over last week and stuff in a minute. But yeah, so I took a shit loss on Tuesday. Then this was FOMC yesterday. Let's get to the charts. Let's stop waffling. So what was I looking at here? Obviously, we had market open here, 1/2, and then FOMC, the second half of FOMC drops here. So yeah, essentially what happened on the day, we manipulated all-time high on market open. We had a really choppy session post FOMC, pre-FOMC as expected. New York AM session. And then FOMC stabs to the downside of a massive volume candle which manipulates these range lows. And if we go to the highs, obviously we're extremely overextended bullish. We do have lower draws, like for example, this massive new week opening gap. But the general analysis is we're obviously extremely bullish. Yes, we're overextended, but we're not going to predict the retracement. That's something that I learned a long time ago in Forex. Predicting the retracement will all never end well. You wait for confirmation, you wait for the market to review the low-hanging fruit, then you act accordingly. Predict, do not react. Just because the market is bullish, going, oh yeah, we're definitely going to sell, does not end well at all. You wait for that confirmation. So essentially what happened is FOMC drops, gets a very manipulative and inducing candle to the downside, which manipulates our short-term range low into a 4-hour fair value gap. Yes, we had potential lower draws, like the new week opening gap, but we're not just going to assume the market has to retrace right this second. Will it retrace on there? Yes, highly likely in the coming days, weeks. But we're not going to assume it until the market makes it clear. So what happens here? We manipulate into this 4-hour. We run our range low in our current leg. This is the most recent major liquidity point. This was the swing low, the higher low, which made a new higher high. This is classic manipulation in a bullish market when we run liquidity into key areas to continue higher. And then what also do we know about news? So if we go to the 5-minute now, you can see we got a very impulsive candle to the downside on FOMC. Price manipulates into key levels and drops to the downside with FOMC with a very impulsive candle. What are people seeing here? So we have the fact that we have lower draws. We have an extremely high volume move to the downside. A lot of people will get induced by this. They will see all the sell pressure. They will see prices impulsing to the downside so with such momentum that we're going to continue. And everyone will be selling continuations, selling retracements, looking to go short, thinking the market's so overextended. Powell speak when FOMC was obviously bearish, and they'll be looking to short the market. But what am I seeing? I'm seeing an extremely inducing push into a bullish key area, which is what? Going to induce people short, which then in turn builds liquidity. So then this will likely cause a manipulation of that liquidity. So we have a inducing push, price inducing people net short, but that inducing push ends inside of a bullish key area, creating liquidity that the market will then likely target. So that was my kind of preface for a long. We had a 5 minute here, which we actually inverted, but not by much. Like pretty much straight away after close back above. So we had this obviously opposing fair value gap. And essentially what I want here is what I call a pop down. So essentially when we have a leg in which we have a draw maybe at the one end of the leg and we have a key level in the leg, I want to see a reaction from the key level to give what I call a pop, either a pop up or pop down in this scenario, which is essentially a reaction out of that key level into an opposing key level like this bullish fair value gap to where we then look for our confirmation entry. So I dropped to the 1 minute, and what did I see? So we had price mitigate this key level, this 4 hour fair value gap and our range low. Impulsive candle generates liquidity. We impulse to the downside. We mitigate our 5 minute fair value gap with a V-shaped recovery. We then, this is early signs that this gap is not really holding. We then break higher. And then I was looking for some sort of manipulation from the downside, and then confirmation, volume out, that we can then trade towards our draw on liquidity. I marked out these two range lows. This is our intermediate tim low, which mitigated the 5 minute fair value gap, then made a new high, also leaving behind the remainder of this 1 minute. And as you can see, price then trades into this area. And if we look at ES generated equal highs. We have kind of the same analysis on ES. We have an impulsive stab to the downside which manipulates all these range lows. This is our overall draw on liquidity, but closer to that we have equal highs and a lot of just accumulation highs in this area. We then push to the downside and manipulate the origin of the move which generates liquidity, given an SMT, because NQ only ran this low, not the overall low. So we have a divergence showing that Nasdaq is strong in comparison to the S&P. We have a very nice SMT, a nice manipulation. Draw is higher. Let's look for the entry model. So we then look in this leg for our highest time frame fair value gap in the leg which manipulated this low. It was this 3 minute. I want to see high volume out of this area, and we get a nice initial 1 minute candle. And then eventually, this 3 minute closes very bullishly. I take the close of this candle because it closed above this bearish 3 minute fair value gap. My break even is the internal high. TP is the FOMC liquidity point. I had my stop loss below this sweep. I entered here. So this was a 3 minute close, entered here. Price pushed to the upside and a bit of a drop. And what happens here, I move my stop loss to break even shortly because we mitigate this 1 minute. Get a nice reaction out of that, push to the upside. And then we have this push. This push, break structure, minor structure. Again, obviously I'm not going to move my stop loss at this point. But we actually opened a very small 1 minute fair value gap here. Price taps into that, and then we get a push higher. I move my stop loss here to break even once we broke higher, because we had that intermediate tim low, had that volume out. I would not like to see price revisit this area. I want to see volume to the upside. Then we get a lovely delivery right to our draw on liquidity for a lovely just under a 1 to 2. Lovely stuff. And ES aligns perfectly as we run that FOMC high. ES runs this accumulation of highs. Lovely liquidity point. Lovely alignment of both assets and a lovely overall trade. So yeah, that was yesterday's trade, lovely stuff on FOMC. I don't actually trade news but I tend to trade the aftermath. I do like to see when news manipulates into a key area. I really like to see the buyback into that news liquidity point. So in this example, this is kind of the only time I really trade PM session as well, because I'm trading Forex in like London session and New York, but it's on the higher time frames, and I just trade New York AM session for futures. But on FOMC days, I'll trade the hour after FOMC, power hour, just on the FOMC day. So yeah, lovely long, just classic news creates liquidity. We then show our strength and trade into that liquidity point. Very simple trade. I also took a loss the day before. It was a shit loss. I'll actually show you it. I journal all my trades. Really bad. Essentially, I got bored and I took a trade that I shouldn't have taken. So we're obviously very, very bullish, but overextended. And I essentially just forced a retracement. We had a manipulation of our pre-market high, but we're bullish. I understand we're extended, but we're still bullish. Into our 15-minute fair value gap, manipulate a 15-minute short-term low, and I'm selling. Why am I selling? Yes, we had a 15-minute key level. Yes, we had an entry model. But where's the draw? I'm taking a trade, and I'm just flat out predicting the retracement phase. Like there was no thesis. It was just, yeah, key area, entry model, draw is lower. What the fuck does lower mean? If you can't tell me where the draw is, why are you taking a trade? This was the epitome of predicting the retracement, seeing that price overextended, so we gotta sell. No, we don't. Yeah, look at gold. No, we don't. So yeah, I did low-key get stop hunted. It was but it was a shit trade anyway. If I won, it would have been a bad win. And yeah, so I took a loss, 15-minute fair value gap, manipulation. I took that inversion, but it was just predicting the retracement phase. There was no clear draw on liquidity. I should not have been trading last week. So yeah, apologies, I have not. I said I was going to record trade recaps off, and I just flat out haven't. Last week was a ropey week. It was quite a tough week of price action, but I got quite unlucky, if I'm honest. I'm not one to what's it called, to be generous to myself and things like that, but I did get quite unlucky. I had Monday was just no trades, just an expansion day. Tuesday, I didn't play it the best. I was quite unfortunate what happened, so I took a small win. It was a partial win. We had an SMT, so I just closed. It was like just under 1 hour win. A break even, which literally wicked me out and ran to take profit. Then a loss, which literally, it was my own fault because I had a floating stop loss. I tried to maximize risk reward when my stop loss had no logic behind it, no thesis, and I literally got wicked out by only 1 point, and it ran to my take profit. So I took essentially a small loss that day, pretty much a break even day. There should have been no trades. I took a really shit trade, but luckily I got out of break even. This trade was very unfortunate. I traded very well this day, but I literally got broken even to the exact, I'll show you the trade. I got broken even to the exact, the exact tick, and it ran to my TP. So what happened is, this was a trade, it was quite a clean trade, and objectively, it won. But I waited for the retest of this inversion fair value gap, because I had an early break even. I don't like being risk on all the way to the external high, and I had a shit fill, and my fill was literally the equal, like exactly the low point of where price retraced to. So I got broken even. So I got broken even to the exact tick. Then it flew to my take profit. So that was pretty gay. Not ideal. And then Friday, the weirdest thing ever happened to me. So I took a scalp. It was a clean trade, but it was a very small confirmed move. And I had top step open, so I normally have my top step like this, like small on the side, and I wasn't scrolled to price, so I pressed buy. Then literally probably 30 seconds it took me. By the time I scrolled up to price and realized what was going on, price had literally somehow already hit my TP, which I didn't set. I set them after I'm in the trade, and had retraced like back to break even. It was the quickest trade I've ever seen in my life, but obviously I didn't have my TP set because I wasn't scrolled to top step, and somehow within literally 20 seconds price had hit my TP and come back. So that was unfortunate. That would have been like a 1.2 hour win, but it ended up being a $55 win. So yeah, that weren't ideal. So quite an unfortunate week, but overall I think I held fairly well. It was quite a tricky week in price action. I followed the plan for most days. I had my odd wobbles. This day I really married a narrative. But overall improvement. Good patience on Monday. There was nothing at all. Tuesday obviously I could have improved. Showed you the invalid loss I took. And then a lovely win on Wednesday. Hopefully you can end the week strong. Currently up 3% on the account. God willing I can get this one passed and this can be my first futures account. That would be absolutely amazing. But yeah, that's where I'm currently at. Still improving, still learning from all my mistakes, grateful for everything, and yeah, I'm enjoying it. I love futures, I enjoy trading it, and yeah, everything's going good. Really rough week on Forex, not so much in P&L. I have taken a loss. I took a loss on Monday. It wasn't the best loss, for honest. It wasn't an awful loss. I understand where I was coming from, but I learned something. And one day when I'm actually like post on YouTube, I'll make a video about this, but it's conviction. And how I asked myself a question, and I was like, what is my worst day? What are my worst P&L days? I was thinking they're not when the market's choppy, they're not when the market's unclear, they're when I have massive levels of conviction, which sounds so reverse, but I'm quite disciplined in my trading to where if there's no setup, I just don't take a setup. I'm patient. I can go weeks without a setup on Forex. Again, normally not weeks, but I can go a week normally without a setup sometimes. I'm very patient, I'm very disciplined. So those choppy days are no problem for me. But when I have conviction, when I have a lovely key area, I force my narrative and what I want to see onto price, and it's not actually there. And that's what I did on Monday. It was a beautiful narrative, a beautiful key level, but I didn't wait for adequate confirmation that I normally would wait for. As a result, I got punished and I took a loss. And just -1 for the week. Just price action in general has been disgusting this week on Forex. It's really choppy and yeah, not nice at all. But yeah, still up on the month. I think I'm up, not a big month on Forex. I'm up like 3% to my funded, which again, happy days, can't complain. And yeah, that's 3% on a quiet month. And I've made, yeah, I had that mistake and I made another mistake. I think I made 2 mistakes this month. There was another trade which should have been a break even, but it was a loss because I put my stop loss below a random low and I should have had it on the swing low. So yeah, not a bad month. Nice to be able. Yeah, I'm up 3% on both Forex and futures, so lovely stuff. Being quite a consistent month outside the charts, which is nice. And yeah, I'm excited. I'm really excited for the rest of Q4. Hopefully get a nice November, and then December will likely be slow, but that's life. January we don't do much trading, and then back on to February. February's normally a nice one for me. So yeah, apologies for the waffle. How long is this video? I don't know, but probably a long time. Nice one, gents, and I shall speak to you soon.